Hello, financial investors, and welcome to the channel. My name is Brent, and today is March 23rd, 2020. We are going to be doing our Stock Monday buys right now, going into the market. Now, I did post a video here on Sunday going into futures being halted because the Dow Jones fell by over 5% due to the bill for the getting denied essentially. So stock futures plummeted here and the futures were halted. So right now, Monday morning, it is expected to be negative as I'm recording this video, which is another good opportunity for me to buy with the capital that I have within this account. Now, what I want to do is continue to with my plan of dollar cost averaging into this market. I have gone through my portfolio this past week, look at positions that I would like to average into during this downturn, definitely begin to add more equity to them. So I'm going to go ahead and cover a couple positions that I am going to be averaging into, and then deciding on which of these today we are going to be buying here for today's video. So if you are brand new to the channel, have not yet subscribed, I would really appreciate it if you do hit that subscribe button below. If you do enjoy this video, find it helpful, definitely hit the thumbs up. Entertaining, smash that thumbs up. If you guys have any questions or comments or anything at all, drop it into the comment section below. I do read and reply to all your comments, and let's go ahead and get into the video. So this last day on Friday, I believe Thursday we were down by a good percentage. Friday we were also down by a good percentage. The markets as a whole were down over 10% this past week. S&P was down, I believe, maybe 13 or so percent. Dow Jones was down a good chunk. The Nasdaq did the best of the three main indexes. So very interesting this past week. Now, as far as the portfolio goes, kind of jumping over here, the Roth IRA currently is down 27.35% over, since I started this portfolio back on the 8th of January 2018. I had bought into the market at all-time highs, and I thought that was a bad timing on my part. Well, here we are in March of 2020, and I'm basically getting a reset on where I initially made my buys. I'm still going to be continuing to average into this market regardless of where it goes because the companies that I'm invested in have long standing history of growing their financial metrics, they're growing their revenue, they're growing their earnings, they're growing their net income. And yes, there are going to be hiccups in the road and unforeseen events, such as what is going on right now. But when everything begins to stabilize, these companies will restabilize. They will continue to move higher within their revenue, their net income, their free cash flow, their earnings will recover and grow. And they have persisted through recessions in the past and will hopefully continue to grow and pay out dividends, which is what this portfolio is designed for. So we are down a touch here at 27%, but that is just giving us buying opportunity out there that we just did not have in the past when we started this portfolio. We can see that our market gains are now down $3,138, and the equity of the invested total is at $15,000.90. So essentially just a few weeks ago, maybe 4 or 5 weeks ago, we were roughly almost touching $21,000. So we have lost within this past month over $6,000 of equity, just paper loss of $6,000. We haven't lost any of our shares. I've actually sold out of positions, which I covered in my Sunday video, and move that capital into other positions. So we'll actually kind of cover that here just a little bit in today's video, kind of going over the past week's activity as far as stocks that paid out dividends and some of the positions that were purchased or sold in this past week. Since you are here tuning into this video, I really do appreciate it. Okay, so let's go ahead and do that. And also we do have $2,000 in cash sitting in this account. I'm not going to be investing it all at this time. I'm going to be breaking up into certain buy points. I do have positions already set to the side that I want to begin entering. I've already marked them over in my spreadsheet, so I'll go ahead and show you how much I want to invest in this minimally, and then at that point I still have another almost $2,500 I can add to this account this year in order to max it out for that $6,000 for this year. So let's go ahead and head over to the activity and we'll check out just the dividends that were paid within this past week. So last week was the 16th through the 20th. So here we are on the 16th. Let's go ahead and minimize that. We were paid by Consolidated Edison. Let's go ahead and bring out our calculator as well. So we had Consolidated Edison paying out 355. So 355. We had Kellogg's paying out $4.76. We had McDonald's, small position that I recently started not too long ago, but I've been averaging more into it now that it is negative in the portfolio, so I have been moving more capital into it. So the next time it does pay out a dividend, this will raise by a couple. And we have Stanley Black & Decker paying out $3.27. And we have Avery C. Dennison paying out $2.74. So this past week, we made $14.65 of dividends. So not a whole lot. Plus our normal investment of $115.35. We're going to be investing roughly $130 at this time. I may choose to invest more, but we'll kind of see here as we're progressing through this video. So $130 at the minimum is where we're going to be investing today. Now, over this past week, as far as trading goes, we'll go ahead and do the trading. We'll remove dividends, and we'll leave this. So on the 20th, on Friday, I looked at the markets, and I want to have cash available on hand that I can make specific moves on positions that I feel are decent at this point. I still have another $2,500 I can add to this account and average down even further on positions, but I think a couple of these positions are at a good buying opportunity for what is kind of going on in the market. I still think that there is room for them to fall, but that is why I'm continuing to have more capital on the side. And then there's always next year where maybe these positions, maybe what is taking place right now, does persist for a foreseeable future. The 2008 crash, it started around May, and we didn't see any sort of recovery at all until the following year in May, April. So it crashed in May, April of 2008. It didn't hit a bottom until May, April of 2009. I posted it over on Facebook in the past. So there's a time where the market just trended lower and lower week after week, month after month for a whole year. So if this continues into 2021, well, I have another $6,000 that I can invest in my wife's Roth IRA, my Roth IRA, and we'll continue to dollar cost average into these positions as they continue to bottom out. I don't know where the bottom is, but as long as I'm buying on my way down, I'll just kind of buy with the market. And then I did, again, my Friday deposit of my normal $115.38. So I did want to have a specific amount kind of posted into certain positions. That's why I kind of moved that $21.50. And then also on Friday, I also made 2 sells and 5 buys. My Monday video, I went over that I bought AT&T, and here is me buying more of McDonald's. McDonald's is down some 10% on Monday, and it's also down another 10%, I believe, this week alone. AT&T is also continuing to move lower. I bought it at $31.75. I believe AT&T closed below 30 now, maybe in the 28, 29s. McDonald's, I bought it at $159. It's moving even further. I guess I can pull it up here on the side. We'll go to dividend.com. So we'll look at McDonald's real quick. I always like these videos just because I like to kind of go through information. I like covering information. So AT&T and McDonald's. I purchased AT&T at $31. It's now at $28. AT&T is a great position. I would like this one down in the 25s if possible. It's usually around 27 where it kind of hit a bottom last time during the 2018 sort of collapse. But we may see an even further bottom here of AT&T. If customers can't pay their bills and they're having to go in and cancel their plans, that's going to affect AT&T in the short term. So maybe customers will come in having to disconnect their lines, being unable to pay for their service on their phone. I'm not sure how those kind of play out. If they do get laid off, they'll get unemployment. Phones, your housing, your phones, those seem pretty essential in today's world. I don't have my own home phone, but I do have a cell phone. So I don't think I would ever get rid of my cell phone just because it connects me with everything. McDonald's, I purchased it at $159. It is now at $148. Just $10 lost within a week there. So pretty good swing there for McDonald's. So definitely positions I would like to continue averaging into. And on Friday. So I did decide to sell out of General Mills at, so I did sell General Mills at $52.70. So if I go over here and I go ahead and select General Mills and I go back, and I also sold CVS, ticker symbol CS, CVS. So CVS, I sold out of these two positions here. So General Mills, I sold out at $52.70. It is now at $53.37, so it has gained slightly. 52.70. It's at 53, so it has gained since I sold, but I did sell this one in the green. It was up positive by about 35%. Now I'm only going back to February to kind of show, but it has gone positive here this last month. Where's GIS? This should all be sorted alphabetically. Oh, that destroyed it, so let's not do that. So where is GIS? I can just do a Control F. GIS right there. This one did have a 21% gain in February. Here in January, it's actually been moving positive. I sold out of it at 35% gain. So you can see here it was valued at 336. It is now valued at 362. So it moved up since February. I went ahead and sold those shares. That is because I decided to kind of sell this because I looked at this, and while this is showing that it does have 15 years of dividend growth, it does have a solid payout ratio and a very nice yield of 3.62. When I was looking at how long it's actually grown and paid out dividends and been persistent through recessions, it's this past, if you look at the history here, back in 2016 was its last raise. It raised its dividend from 48 cents to 49 cents. So since August 2017, it has paid out that constant 49 cents for the past several years, almost 3 years now, right? So if we do go into a downturn, I'm not saying that they will cut their dividend, but they may potentially cut their dividend. They haven't really raised their dividend. They don't have any reason to cut their dividend just because of what their payout ratio is. General Mills is a great company. You're buying tons of processed foods, packaged goods out there. I know I like to buy my Quakers. I talked about it in my recent video how General Mills will probably persist really well during this downturn as consumers are buying their products. But at this time, while it is positive, I went ahead and took those capital that I was positive on and rolled it into positions that were either new or were negative in the portfolio that may offer me a better return in outcome in the future. So I rolled it over into Main Street Capital, Eaton Vance, Genuine Parts. Realty Income is a brand new position I recently added to this portfolio, and I will be continuing to average more into this position. I bought it at $47.45. Not the lowest of the low, but I would like to buy more of it, so I'll probably buy a little bit more in the future here. And then my last one here was UGI Utility here at $108 there. So those are the 5 positions. I kind of just sold some positive wins in the portfolio, moved the capital into some losers that eventually have some really good upside potential to them. So that is some of the activity that took place here not too long ago, just here on Friday. Okay, so now we've kind of discussed what took place in the market, some of the activity of the portfolio, some of the performance here of this portfolio over the past month, for the week. We got destroyed here, down almost 16% here in a week. So definitely some positions out there just getting wrecked. So if we look here, only Clorox was Clorox, Walgreens, and Walmart were positive here in this portfolio. Everything else just obliterated out there in this portfolio. Simon Property Group, Main Street Capital, WP Carey, all these REITs here down towards the bottom. Guess who raised their dividend here recently? WP Carey. If we move over here and we go into the live data, we can see here that I am showing that Realty Income hadn't really been tracking it, but it does look like they recently raised their dividend. And also down here towards the bottom, we have WP Carey, which raised their dividend from $4.15 to $4.16. It's not a massive increase, but it's just consistent. So if we look at O and WPC, we'll probably see that here that they recently increased their dividend. So here, Realty Income raised it from 0.2325 to 0.2330. So only a 0.005 cent difference there, but it is a difference. And then WP Carey, they increased their dividend here down towards the bottom from 1.038 to 1.04. So just continuing to raise and pay out that dividend, and that is going ex-dividend here at the very end of March. It's a quarterly paying company. Could be a really good buying opportunity, offering a 9% yield, having 19 years of dividend growth, property management company. So they are definitely going through some tough times during this downturn, with potential tenants not paying their properties. I know I got a letter in my email from my property manager asking if I'm offering to take cash loss as far as lowering rent or not covering rent. So that's, things that everyone has to sort of decide if they have property out there. Okay, so all these positions here, I did write some on the side here. I wrote down how much I want to invest in these here in the short term, like our first sort of threshold where I'd like to add more capital to them. And this was prior to my Friday buys, so I may actually remove Cisco from there. It's not a bad position. I think Cisco will not cut their dividend. I think they're in a really good position right now. It's more consumers are using their products such as Cisco AnyConnect, and there's a couple other devices out there in order to VPN and connect and work from home. So I think Cisco is still going to be a safe bet. Actually, I can raise this to right here. 280 and 416. Okay, that clears that and that increases that. Okay, so these are some of the positions that I want to focus on. Oil, Chevron, I want to add $300 to that. Eventually, I'd like to add $300 to it. Maybe I'll break this up into 4 increments, so I'll just add 300 by 4 is 75. Main Street Capital, I want to raise $300 into it. UGI 200, Stanley Black & Decker 100, Genuine Parts 200, Eaton Vance 200, WP Carey $200, Pfizer $100, Essex Property Trust $100, Cisco $200, and Johnson & Johnson $50. Those are ones that I want to focus on. These are ones that are also negative in the portfolio. So if I swap to this, Chevron is down a good portion here. So I'm going to move these just over just a little bit here. And Chevron is, I know it's one of my worst positions here. Chevron down 47.57%. So it has cost basis of $530. By injecting $300 into it, it'll put that position up to about $830 of capital into it. Now I don't want to do it all at once, but eventually I'd like to kind of put that all there. That way I want to get all my positions up to about $800 of equity. So I want to take advantage of the ones with the biggest dips right now, and if they do fall into the future, I have another $2,500 I can inject into them this year. So it's not like I'm doing anything bad. And these ones right here only make up about $1,950, so a little less than $2,000 to make these positions to where I really want them. Now, of these positions that are here, Chevron, so let's start with Chevron. It pays out, or it goes ex-dividend every 2, 5, 8, and 11th month. Main Street Capital goes ex-dividend every single month. So Main Street Capital, I'll probably break this up into 4. So again, I'll probably put $75 into this one on my next buying opportunity. UGI Corporation, it is negative. I know it's negative here. It's down 24.79%, has 34 years of growing its dividend. I don't know if this is the correct data. I know it's recently added. It's dividend growth. I don't know if it's actually 14.10%. I'll have to look at this. Actually, I think I recently went through here and looked at it. But either way, UGI Corporation, utility there. I want to add more equity into this one. I have UGI at $200 as a starting basis, so that'll put it up to about almost $500. This one goes ex-dividend in June. Oh, it goes ex-dividend here recently in March. It should go ex-dividend. So let's take a look at UGI. I'm going to close out some of my other tabs. And UGI, see when it went ex-dividend. It went ex-dividend on the 13th of March. So I already kind of missed that vote. So we'll still leave it here for now. It could be, I still want to average into it. Stanley Black & Decker, it should be, I don't think it's beat up so bad, is it? Let's see here. Stanley Black and Decker. So these are kind of going through the thought process here of why I've picking certain positions, why I sold out of certain positions. Right there, Stanley Black and Decker down 42.75%. This company has been growing and paying out dividends for the past 52 years. They have a pretty solid payout ratio of around 31%, 31.01%. 10-year growth rate of their dividend of 10%. So really, what's the word there? Very unlikely that they will cut their dividend. They don't have a high rate. I do have my own yields at 1.99%, but they're offering a now 3.47%, which is very nice. So Stanley Black & Decker, they do go ex-dividend in this month, so I'm going to go ahead and pull them up. Genuine Parts, let's go ahead and continue on. Let's look. I'm going to pull all these pieces up that are going ex-dividend here. Genuine Parts, Eaton Vance, EV is right there. It is going ex-dividend next month, so it's still worth potentially added into as we're moving into April. WP Carey, this one we already saw earlier. It's going ex-dividend here at the very end of the month, so this one also worth investing in. Pfizer for me, it is going ex-dividend in May, so I do have some time. Maybe the Pfizer will continue to fall just a little bit further here. Essex Property Trust right there. Essex Property Trust goes ex-dividend here in April or March as well. Cisco up, where is it? I don't think it's beat down as much, so it should be in this area right there. Down 15.38%. It goes ex-dividend in April. So again, not too far away, so I could definitely average into this. And Johnson & Johnson, J&J, not beat down too much at all right there. Down around 12.4%. I don't want to add too much equity to it. You can see I have $842 added to it right now. It doesn't go ex-dividend until May, so I'll kind of hold off on this one. I'd like to see J&J fall even further. It is currently priced at $120 essentially. Maybe we can get it for $110, 105. You've seen all the other companies that are kind of in the same area, like Clorox, Colgate, General Mills, consumer brands. Johnson & Johnson's actually been beat up here in the short term, but they have been recovering here in these recent few days. Okay, so now we're kind of taking a look here. This one already went ex-dividend on the 13th. Stanley Black & Decker, we scroll down here towards the bottom. It went ex-dividend earlier in the month on the 2nd. Genuine Parts, if you scroll down here, this one went ex-dividend on the 5th. So this one goes in between Stanley Black & Decker, UGI. Eaton Vance, this one went ex-dividend. Oh, it will go ex-dividend in April 29th, so we have another month for this one. WP Carey, we know this one goes ex-dividend in about 6 days, so we can buy this one here shortly and receive those ex-dividends, the dividends. Also, we have Essex Property Trust also going ex-dividend here on the 30th of March. Same with WP Carey. Essex Property Trust, they're a residential, residential REIT, real estate investment trust. WP Carey, they do property management. They also have other properties as well within their portfolio. So both of those are REITs. Eaton Vance, we already kind of discussed. This goes later in April. And Cisco here, I want to take a look. Cisco goes ex-dividend in early April, April 2nd. So the 3 positions that I can purchase right now that'll go ex-dividend in the next few weeks are WP Carey, Essex Property Trust, Cisco, and also, it is showing as negative right now. So I'm actually going to change this one here for the time being, Stanley Black & Decker. While I do want to add more to Stanley Black & Decker, Main Street Capital and Realty Income. Whoops, I selected that way too many times. There we go. These 2 positions are ones that I want to continue to buy more, especially in red days such as tomorrow, Monday, when I'm buying everything. Hopefully these positions will fall even further as I'm buying them, so I will buy them further into the red than where I am looking at them right now. Realty Income, I would love to buy this one around $40 or below. Main Street Capital, $17.82 right now. $15 would be really good, but we'll kind of see where these continue to fall. This payout ratio is a little bit off. I was actually looking at the Realty Income, looking at their free funds from operation, comparing it to their cash payout. It's around 20% for the cash that they're paid out for dividends, It's at 20 million compared to their free funds from operation of I think it's a billion and some. So their payout ratio from that is a little bit off, and we don't really look at their earnings for real estate investment trusts. Okay, so the companies here that I want to focus on this week are Realty Income, ticker symbol O, Main Street Capital, ticker symbol MAIM, WP Carey, ticker symbol WPC, Essex Property Trust, ticker symbol ESS, Cisco, ticker symbol CSCO, and I am going to hold off for Eaton Vance. Financials are going to get hammered here in the short term, and I would really like to see Eaton Vance get hit even further. Can we get Eaton Vance just a little bit further down? I'm sure we can. I don't think we've hit a bottom and don't see a bottom here in the short term. So I do see positions swinging even further. So what we're going to be doing is how much do we want to add to these positions? So Main Street Capital is at 358. So I want to eventually add 300. So I feel comfortable right now. I will add $100 into Main Street Capital. Realty Income is not in the red by as much as I would like it, but it's already in the red. The reason I'm buying it is just because it's down in the $40 range. And this goes ex-dividend every single month. And this one's at $249 compared to my Main Street Capital at $358. So I'm going to put in $200 into O. Eventually, I want at least $500 there, but for the time being, I'll put $200 into Realty Income. So Main Street Capital, O, WP Carey. I think that position is actually pretty high as far as equity involved. Oh no, it's at 493. Okay. So I will put $100 into WP Carey, $100 into that one. Essex Property Trust, ESS, it is right here. It has $399. We'll put another $100 into this one as well. We have Cisco right there, $100. We'll just say $100 into all of them, besides Realty Income. So we're going to be investing about $600 total, and that is what I feel comfortable investing at this time. We do have capital remaining in the account we can continue to invest in if the market continues to fall even further rapidly. We still have another $2,500 that we can inject into this portfolio throughout the year in order to max it out for our $6,000 contribution for 2020. So at no point am I making any sort of rash decisions. Everything that I'm doing right now is calculated. I am looking at the portfolio. I am not deciding on making sells or buys made on based on my mood, on my feelings, on my emotions, on fear. Everything that I am doing as far as my buys, my sells, it's based on principles and standards. I see positions that are high that could potentially move here and could move higher, such as General Mills and CVS. They could do a lot better than where they are now. But right now, I am selling them in the green because I believe that there are better deals out there who have really good financial fundamentals, going back to those basic principles and standards versus moods and feelings. So that is what we're going to be doing. So I am logged out of M1 Finance. I'm going to go ahead, log back in very quickly, and then we will go ahead and make our purchases here on Monday. Okay, so log back in. I'm going to go ahead, move my screen over here. That way I can kind of see what I had planned. And we're going to go ahead and sort this by my negatives because that's always nice. Main Street Capital, we're going to go ahead and buy $100 of this one and continue and confirm. We're going to go ahead and select WP Carey, WPC, select this one, buy. We're going to go ahead and buy $100 of this one, continue and confirm. Done. We're going to go ahead and buy Essex Property Trust, ESS. That right there. We're going to go ahead and buy $100 of this one as well. Continue and confirm. Go back to the portfolio. We're going to go ahead and buy Cisco. $100 of Cisco and continue and confirm. And we're going to go ahead and buy Realty Income. I'm really hoping it falls hard here on Monday. Really hoping it falls hard. So take a simple O. Well, cannot do a search for O. We'll do a search for Realty Income. There we go. And we'll select buy. And we're going to go ahead and invest there $200. In total, we have confirmation set up there. So right now, we can see our upcoming buys right there. Cisco, 100, WB Carey, 100, Essex Property Trust, 100, Realty Income, 200, Main Street Capital, 100. Now, all of these buys that we're buying, they're going to be going executing here shortly, which is going to increase our dividends in the future by whatever amount of shares that we purchase. It's going to increase our shares by a good amount, which is going to increase our overall income. Now, the reason I kind of mention this is because I sold out of positions here recently. I mark them down on my graph here. Right here is where I mark all my buys, my sells, right here. I'm going to go ahead and zoom in so I can kind of show you my sell process here. So I sold CVS 2.91 shares and General Mills 6.87 shares. Now these shares here that I sold, they are moving positive. General Mills made about $4.61 since I sold it. CVS has made 52 cents since I sold it. Here we can see the yield that I sold it at, the current dividend yield that I sold it. The annual income that I would produce is $19.30. So I sold shares that have gone up by $4.61 and produced $19.30 in dividends. But the capital that I reinvested that back into was Main Street Capital, Eaton Vance, Genuine Parts, Realty Income, and UGI Corporation. Now these positions during the same time frame are actually negative by about $10.37, whereas these positions here, I purchased them, they're up $5.13. These positions here are down for me roughly $10.37. But what I traded here was the monthly income of $19.30 to now $31.68. So all I did was transfer equity and I increased my dividends from, let's go ahead and bring up my calculator once again. I increased my annual income. I went to now $31.68 from making $19.31. So $19.31 by swapping equity around, by selling positions in the positive that were growing, and they're not raising their dividend right now. They're basically kind of stalled out. The only thing that I have working for me right now is there are dividends getting paid out within the account and equity that's increasing on a slightly basis. It's increasing slightly. These positions, on the other hand, they have been beaten down by a ginormous amount here in the short term. I think that eventually they will recover with time, and while there is blood out there in the streets, I'm going to be purchasing more shares of them at these discounted prices from where they were at just a few weeks ago. And in the future, they have more upside potential because they are going to be recovering, in my opinion. And also, I'm locking in a nice dividend of $31.68 difference there, a difference of $12.37 just by kind of moving equity around. I didn't add any more equity into the account. I just kind of moved equity around. So between February, my dividends was at $775. My portfolio at the very end of February was making $775. Currently, with the current, as of last Friday, the portfolio is now generating $810.16. So within just a few weeks, we still have 2 more weeks of injection. We have this week and next week of injecting more capital on our weekly basis, plus the capital that we have in there right now. We may see our annual income increase quite a bit here recently as we're injecting more and more capital into this. Our annual income, I'd like it to break $1,000 this year. So that is our goal that we're kind of setting and going for. We'll kind of see how it kind of plays out. I do believe we're going to be hitting it, especially with these prices where they are at. So I'm pretty excited. You can kind of hear the excitement in my voice. I'm at no point am I scared right now. I'm really enjoying this buying opportunity that I don't get very often. I didn't have capital back in 2008 in order to inject into the market. Right now I have capital to inject in the market, and I'm doing so on a calculated basis. I'm not doing it all at once. I'm doing it on a scale of where I feel comfortable, regardless of what the market does. It's increasing my annual income in strong financially fundamental companies. So that is going to be it for today's video. Let me know in the comment section below what you are doing yourself. Are you buying any positions currently? I know a lot of investors that already bought all they could in the markets, and this is all they can do. Regardless of where the market goes in the future, they're kind of strapped for cash, especially maybe being potentially laid off, maybe getting their hours reduced. All that's kind of getting, happening out in the world right now. So let me know where you are as far as your situation goes. If you're buying, if you're kind of holding, if you're waiting, drop that below. If you did enjoy this video, find it helpful, entertaining, I always like to go through my thought process of why I sold out of positions, why I am moving capital around, why I'm buying certain positions. I didn't go into the fundamentals of all these businesses that I'm buying and why they are buying, but if you are interested in them, you could do your own research. But I will probably make a video in the future. If you're interested in any specific company, just drop it below, and I do periodic videos where I will go into the fundamentals of these companies and the reasoning for buying them. So that is going to be it for today's video. Thank you all for tuning in. I will see you next time. Have a great day. Bye.